All right, so we've got a little bit of news around ETFs today and what it might mean if we do get a denial. Is there going to be some action? JP Morgan thinks so. We'll break it all down for you guys. I think you'll like it. My name is Paul Barron. Welcome back into Tech Path. Let's get started. I want to go over to a couple of points here in reference to the ETFs that are currently in kind of limbo. This first article right here, Cantor Fitzgerald says they see spot Bitcoin ETFs as the most important short-term catalyst. And this I would agree with. This is something that we've talked about here on the show quite a bit. There was a few highlights we pulled in here. Comprehensive surveillance sharing agreement with regulated market of significant size would obviously modify the regulators. ETF approval would be a significant short-term catalyst for Bitcoin's price. And that's something that we've talked about a little bit. And I'm kind of curious, would you guys, drop some comments down below? Because if you would play this right now, and we do, because it looks like maybe an ETF gets clarity before we get regulatory clarity. If we do get, let's say BlackRock or a Fidelity, one of the majors comes out with an approved ETF or a group of majors, what would that do to your current Bitcoin position? Would you continue to dollar cost average in, or would you maybe sell during this high and look for a retrace? Kind of curious on how you guys might play that. A couple other highlights they hit on is approval would be a bedrock movement in Bitcoin's long-term adoption and legalization. All this was coming in. And I think this is something, when you look at further in the article right here, they said it's increasingly confident that the slate of applications from asset managers to launch spot ETF on Bitcoin will be granted and approved by the SEC. So I think everybody is looking at the direction that this is going to happen. There's only one thing. We have Gary Gensler in the way. So I want to go into a little bit of Gary Gensler's past. And these are some clips that showcase, because maybe some of you might think, well, he just doesn't know enough about what's happening with blockchain in general. Let's go to this first clip and listen in.
You would have allowed the Winklevoss twins, I think it was, Gemini, to go forward with the exchange-traded fund. Do you want to say a few words about that?
The question is, can those list and trade in the United States? They would provide another point of access for people who want to get exposure to these types of assets. I think we need to look at what our rules allow us, what our statutory framework is, and what we're allowed to do and not do. And again, I thought that the SEC took a step when they said no to this particular application. I thought we went beyond our statutory authority. And I thought that we should have allowed this to trade.
But I do think the two agencies have taken different approaches, partly because their underlying statutes are different. In the commodities laws, the exchanges can list a new contract, and they don't, in a sense, don't ask for permission. And in the securities law, to do an exchange-traded fund, you kind of have to go knock on the door of the SEC and get permission. But underlying that, Bitcoin futures and I think Ethereum futures and so forth will exist, and Bitcoin ETFs have not. And that feels a little inconsistent to me.
All right, so this came from a talk, and that, of course, was Hester Peirce, one of the commissioners over at the SEC. This came from a talk at MIT in 2019. So there is clarity in the sense that Gensler understands what's happening in the market. What's interesting to me, 2019, here we are, end of 23. That's 4 years. And Hester Peirce's position has continued to be this dissenting position, but yet at the same time, no action. I'll get to that in a second. I want to go to another clip, because this clip is going to talk a little bit further around how and his position, meaning Gensler's position on crypto in general. Listen in.
How I sort of think about this space in this whole area, blockchain technology and crypto finance, is that it's a new way to have tamper-resistant data amongst a consensus of multiple parties. And what my research is mostly around the business of blockchain technology. And while I get to dabble a bit on the policy side because of my former role, that's really what I'm trying to do, is to find where are the real use cases, where traditional database structures don't work as well. I think finance, though, is an area that it is applicable because it's huge data, it's huge networking, and we're dealing with property rights, and we're moving property rights around. It's good to have a tamper-resistant way to do it, and a peer-to-peer network might be, it's not always, but might be a better way to do it. our financial sector still pulls about 7.5% of our economy. We might be able to be a little bit more efficient than $1.5 trillion a year going to the financial sector, and I think technology might be able to get us there.
What's interesting is I think Gensler at that time in 2019 was still on the fence. I think this was before someone like a Senator Warren got to him. So it's interesting because when you fast forward here and you look at how far the SEC has gone, one of the things that you have to look at is this statement right here. This was Hester Peirce, overdue statement on the dissent on LBRY. The LBRY case, in case you don't know, Commission has brought many troubling crypto enforcement actions, but the LBRY Inc. case was especially unsettling to her. And just to give you a little bit of understanding on it, LBRY was a case in which they've pretty much given up. In other words, they were pressured into settling in the case and not being able to continue to fight. And essentially, this is what she's talking about, because it puts a lot of these startups, a lot of these emerging innovation companies like LBRY and what they were trying to do, but literally out of business. And that's the problem right now. They're essentially going to have to sell all their assets just to be able to satisfy some of the debts that are owed to their creditors, but also even the SEC. So this is a big one. And in that particular case, Hester Peirce, this was her tweet. Within that tweet, this is Stuart Alderoty. Of course, Stuart Alderoty coming over from the Ripple case. Thank you, Commissioner. When you see injustices like this continue in non-fraud cases, while consumers wait for a recourse from actual frauds, perhaps it's time to set or let ordinary rules of protocol go by the wayside and actually speak out louder and sooner, perhaps with an amicus brief. So this would put the course in action for something like the Coinbase case. So that could be a real quick settlement, and it would start to move things forward. Problem is that, of course, would, I think, put the SEC in a very precarious situation going forward, especially around the ETF's approval, because this is essentially going to get done. I really feel that this is kind of the next step. I want to go to one more clip, because this is Peirce. Now, if you think about, go back 4 years in 2019, listen to what she had to say.
But I do hope that we can provide more clarity so that people are able to launch projects without having this cloud hanging over them.
I find that's helpful. I find myself agreeing with Chairman Clayton, Hester's colleague who runs the commission, when he says he really hasn't seen many initial coin offerings that are not securities. Are you kind of, in a sense, conceptually where he is, or particularly if it's pre-functional? If it is not yet up and running, I frankly can't see how it would be anything other than an investment contract if it is yet to be functional.
Well, but if you're selling tokens to someone who wants to have those tokens because the person wants to participate in that network, why would that necessarily have to be a security?
They may or may not be at one company, but it's a common enterprise of others, and you're buying it at some discount. You're anticipating appreciation because if it's non-functional, I can't use it yet to go to the theater. I can't use it yet to get file storage. I can't use it for anything. Almost by economic rationale, it will be at a discount.
Well, I mean, I think this is why it's a really difficult question, because sometimes these networks really do count on the activities of many people, right? So that's one feature. And the other is there are lots of things, like I might buy a watch now, knowing that it's going to appreciate in value. So
but hopefully you can tell the time on the watch now.
You hope, right? But it might be sitting in a drawer because really what I care about is that it's appreciating in value and I don't want to get it scratched in the meantime.
All right, so I think this is kind of the crux of the matter. We won't get into all that detail, but I think you guys, if you're watching our show, you already understand the idea around these and whether or not it's security. This, again, was back when Jay Clayton was heading the SEC, prior to when Gensler took over. So, and I've got a clip for you guys on Clayton, because he's actually pivoted his entire position around this, and seeing now into the future what's happening here, all this is about to change. This was one note, too, in reference to ETFs. Grayscale was talking about this, hinting at more digital assets-backed ETFs to come. And when you look at some of the statements they're talking about, people have seen this more as a question as when is the right time to get back in? Instead, in previous crypto winters, the prevailing attitude was this is not a viable asset class. Now, that's a pretty big statement. Let me zoom in on that. That's a pretty big statement, because this is something that I think a lot of people today are actually coming to terms with. And what I mean by that is in the past, whether it's 3-4 years ago, they were looking at crypto still as a non-viable asset class that was highly on risk, and necessarily was for a different kind of investor, meaning, we'll just call them degents, people like me, that are willing to invest in startups, in things that will most likely go to zero or have very little chance of winning. But when they do, they win big. This time around, it's a little different. Now it's actually being looked at as a viable asset class. And I think that's the biggest change in this next bull cycle that we will see, whether it's NFTs, whether it's altcoins, or whether we see this in Bitcoin, Ethereum, et cetera, in the blue chips. I think this is the one area that's going to be very different going forward. Now, in the article, they go a little further into this about talking about what else they have in play. This, again, back to Grayscale. We have some public filings in accordance with our series trust for approximately 40 more products that we're considering bringing to market. So this goes, again, back to the idea that we're going to see a lot of different products hit the market in ways you cannot even begin. So I would have kind of asked you guys, would it be an ETH ETF? Would it be a Solana ETF, an Avalanche ETF, a group of altcoins ETFs? How could this really play into a lot of products that really start to flow into mainstream finance? I think that's the question of what's going to be next. I want to go over to a clip here on Squawk Box. This is Jay Clayton, and I'm going to go back here and play this from about the 50 mark. Let's go over to the 50 mark.
Is trading manipulative? And for a time period, people thought 90% of trading in Bitcoin was wash trading, ladder trading, or otherwise manipulative. Is there enough data about trading? Do we have enough data about overall supply and how it operates? All of those questions, in addition to what Bitcoin is classified as, which is a commodity, CFTC, SEC agree, they've all been decided. So the questions that were, what I would say, and so doubt in my mind. Look, I was not comfortable approving a Bitcoin ETF when those questions were open. But I think now they've been decided.
So you would echo what she said, that it's totally illogical that it hasn't been done yet.
Right. I would echo what she said. And I don't know whether Bitcoin's going to be worth a lot or a little, right, but we're at a point where the market can decide.
But Jay, let me ask you this then.
All right. So a couple of points there is that, and I know a lot of people probably disagree with, Clayton, because remember, Clayton was the one that kind of set the ball in motion here on the attack on crypto and in general. But what's interesting here, and they kind of stepped on him saying this, is that he's changed his mind. He's reconsidered. And I think that's something that does happen with a lot of people as they start to look at any kind of technology as it continues to advance. Nobody has a crystal ball to say, yeah, this is going to be, well, we do. Yes, this is going to be huge. But in many cases, when you're dealing with a government agency like this, and I'm not saying that the SEC was right, wrong, or indifferent. I still think they are wrong and that they need to get this thing righted. But the fact that we've got more and more people coming out like this, it's kind of interesting now playing this out, especially with Jay Clayton, former SEC chair. All right, so what does this mean? Well, what it means is that if we don't get a ETF, it's likely that we're going to see active lawsuits. This came in from JP Morgan, says that an SEC rejection of spot on the Bitcoin ETFs could lead to lawsuits. A couple of points in here. Any rejection could trigger lawsuits against the SEC, creating more legal troubles for the agency. And they already kind of have a problem right now because they're going into a very politically charged year, 2024, which is an election year. And it's very possible that the SEC, including Gensler, could become a liability to the Democrats. And that would be deafening to the Democrats. So that is one scenario. But they say further in the article, rejections is unlikely, but it is possible. We believe that the new legal battle on the issue of spot ETF is something that the SEC would be willing to face again. They don't think it would be. So I'm in agreement with this. I think this would really put a lot of pressure on the SEC, both from a funding standpoint, credibility standpoint, losing in the court standpoint, and political baggage that plays into the next election cycle. All of this, when you tie it all together, looks as though we are going to see an ETF approval. If you guys are not checking out our market sentiment index, we're actually tracking this right now, just on general sentiment. If you look at of overall sentiment, and Bitcoin's right now, spot ETF continues to climb. And this was all the way back here from around the middle of October when we started seeing a lot of those leaks on BlackRock and the potential of those, fake approvals. But the point is that people are still very, very positive that this is going to be the case. Now, if you look at the ETH ETF, a little bit more sideways, but slightly up, also from about mid-October, and high performing in terms of still over the overall market sentiment, just in general on crypto. So kind of interesting if you guys want to check out our market sentiment. We're doing some TradFi stuff, so we're checking gold, the S&P. You can also get into overall top 10, which we do, as well as altcoins and Web3. So check it out over there. We'll leave links down below if you guys want to check it out. Let's go over to another tweet right here from Wu Blockchain. This came in from a lawyer, Scott Johnson, said wording on the seed funding in VanEck's updated Bitcoin spot ETF prospectus was similar to BlackRock's, but instead of using cash, let me zoom in on that so you guys can read a little bit better. Instead of using cash as seed funding like iShares, it's recommended to use Bitcoin as seed funding. Seed funding is when the banks and brokerages contribute money to the purchase constituent to stocks in the exchange for shares on the ETF. So, meaning a very interesting trigger here that, again, just shows more potential opportunity here for different ways of being able to get into these ETFs, in the sense that Bitcoin on that true one-to-one valuation is going to be a major factor in how some of these institutions are going to move into Bitcoin, which I think is continuing to be a very intriguing position right now, that a lot of these. So let's look outside the U.S. And of course, you got Standard Charter-owned crypto firm called Zodia is now launching in Hong Kong. And Hong Kong's been up and down, all right? So it's not like, hey, this is another big news thing. The point is that we continue to see more and more global activity around these. So in my opinion, that when you have all of these things happening on more of a macro global perspective, the pressure now comes even from the external markets. So remember that our regulators are trying to get this pretty much put in place just so we can keep up here in the United States. But I think obviously there's some things that are happening internationally that would be pretty significant. Of course, the CEO of Zodia said that Hong Kong was a market where the demand for crypto is driven by institutions. Now it sounds kind of familiar, rather than retail customers, adding the ideal clientele for Zodia. So they're going into the institutional capture. That will be big because it will, again, be a larger bank of institutional capital coming from the East that in many cases could be looking for a diversification of their asset class, moving away from American investments. That's the other thing that play into it. So the Hong Kong government and the regulators see digital assets as the future and also want Hong Kong obviously to be a hub. We've talked about that quite a bit before on the show on what they're talking about, but I think most of you guys would agree that I think it's just in general, this is happening globally. Let's not forget that MiCA is going on right now. You've got this happening right here, which is just in UK to regulate crypto in 24. It's not really just in. This is something that's been on the slate for quite some time in the EU, but the UK now jumping into it around 2024. MiCA, of course, is charged within the EU of setting the markets in motion for crypto assets and how that's going to play out. And we'll see, at least we'll get rules over there, which we don't have currently in the United States. A couple other things to look at here, of course, is Robert Kiyosaki. If you guys don't know him, he's the author of Rich Dad Poor Dad. And a couple of points that he's picking, and I don't know that I completely agree with the percentage breakdown on the diversification. And I'd love to get your opinion on this, but I want to show you where he's playing this market right now. Smart investors invest 60-40, 60 bonds, 40 stocks. That's kind of been the play for quite some time, past several decades. In 2024, 60-40 will be the biggest losers. His is considering a shift to 75% through three major assets, gold, silver, Bitcoin, and then 25% in real estate, oil stocks. So energy and real estate, most likely real estate to take some continuous downturn, which is going to open up some opportunities. And this mix, of course, could get you into a survival. But I'd love to see your opinion on this. Would you, because I'm more of a diversified crypto. I would say, at least for me, I look at around 50% in the crypto asset range and diversifying in all of those areas, and then look at maybe 25% for me into the really high risk, just like joint venture, because I would also include joint venture in that, and then maybe go into 25% into real estate, possibly energy as well. But I'd love to get your breakout. Drop in some questions or some comments down below. This is kind of an interesting statement from Arthur Hayes, and it's an interesting statement because it's looking at the charts based on when the Ukraine war against the U.S. Treasury ETF down 16% versus Bitcoin up 50%. And then also since the Hamas, this is also looking at the same thing on the treasuries, down 3% and Bitcoin up 24. So is Bitcoin being looked at as the hedge against global conflict? Sometimes people have been looking in the past gold as that hedge, or in some cases, maybe other other securities as well as other currencies. But now is Bitcoin being the one that is looked at? So it's an interesting point that I think many people are looking at, because remember, still a lot of liquidity out there in bonds and also in money market, just being able to draw in that 5 to 6%, which is very, very no risk. But we're starting to see a little bit of that shift, which is what Hayes is referencing. So that is a big, big question, because could we see some liquidity coming back in? All right, last couple points here to make, and this, of course, is the FOMC rate hike probabilities. No hike, 99.1%, a 25 BPS cut, very, very low, but somebody is proposing it. This is an interesting point, because this one, to me, with all the numbers that are coming in, especially around GDP, with the fact that we are still seeing job move, and we're also seeing the scenarios of a sticky real estate market outside of commercial. Is this a potential for Powell to maybe say, all right, we're going to continue to pause, but we're higher for longer? Or does he actually start rattling the saber again on raising rates? Love to get your opinion on that. Nothing stops this train. Nothing. Uncle Sam probably. And that's just looking at, obviously, the Fed surplus deficit right now, which is what we're dealing with. All right, guys, we're going to get moving. We got a lot to cover today. We're going to be dropping a Solana video covering a little bit what's happening in Breakpoint. Don't miss that one. And then also, if you're not subscribed to the channel, make sure and get subscribed and hit the little bell so you can get notifications. We're going to try to do some more live streams to pop up this week. Got a couple of big guests this week as well, so make sure and subscribe to the channel. If you're not in the Diamond Circle, get in now. It's another great place to catch additional content. If you want to catch me on X, it's at Paul Barron. We'll catch you next time right here on TechPath.